A self-managed super fund is a private superannuation fund that you control and you make all the decisions around. With Bitcoin and cryptocurrencies, you can get exposure into that space with your SMSF. There's not a lot of banks that are currently, or that's very restrictive with transferring your funds from any bank account into these crypto exchanges. Can you set up an SMSF by yourself? Yes, you can. But you're going to stuff it up. So just engage a professional. Don't try and do it yourself because it is a complex structure and you will stuff it up. When you have a self-managed super fund, there's things you can and can't invest in. You can invest in most things, but one thing you can't do is welcome to SMSF Insider, where we help busy professionals to gain financial independence using an SMSF. Hi, I'm Troy, founder of Blue Chip SMSF Services. And over the last 20 years, I've helped thousands of Aussies manage the complexities of self-managed super funds. And in this podcast, I'll answer your questions, break down the myths, so you can take charge of your financial freedom. Let's get into it. What is an SMSF? So an SMSF is essentially a private superannuation fund that you create for yourself, and you have control over that SMSF. So you decide where the money is invested, and you don't have a fund manager looking after your money and investing it as per their investment strategy. You have your own investment strategy and you invest the funds yourself in a way that suits your investment style. So that is an SMSF. What an SMSF is, it stands for Self-Managed Super Fund, and it allows you to manage your own super as opposed to somebody else managing it for you. Who's involved in a self-managed super fund? Well, you can have up to 6 members, but typically it's mum and dad or husband and wife. And as I said, you can have up to 6 members, so you can add additional members if you need to. But typically what we see is a mum and dad type scenario with most SMSFs. What can you do with an SMSF? Well, you can invest in almost anything. So that could range anything from international shares, Australian shares, initial public offerings or IPOs, so that's investing in companies before they list on the stock exchange. You can have crypto exposure if you are into digital assets. You can hold bullion, you can invest in artwork, you can invest in vintage cars, all obviously with restrictions around some of these different asset classes, but essentially you can invest in almost anything as long as it's done the right way. What makes it different from other super funds? Well, the main one is control, of course. So you're able to, you have full control over your retirement savings. You are investing it where you're investing the funds where as per your investment strategy or as per your investment style. So what makes it different? The main one is control, and then obviously gives you that ability to invest in assets that's more suited to your investment style. Rules you have to follow. Well, there are some strict rules. You need to make sure a tax return is lodged every year and an independent audit is done every year on your SMSF. So they do have rules, and there are also rules around investing, and there's many other rules that apply to super funds in general. So it is important to have advice or have guidance from a specialist in this space. Don't try and do it yourself. And why do people like it? Well, the main one, of course, is control and the ability to invest in assets outside of a conservative, balanced or growth portfolio. You have many different investment options available when you're investing in an SMSF, or when you have an SMSF, I should say. So that's the main reason people like it, control and investment options. It's not for everyone, so not everyone wants to control or invest or be responsible, I should say, for their retirement savings. So it isn't for everyone, but for those who do want control and do want a little bit more say in how their funds are invested, an SMSF could be the right option for you. And finally, with what happens when a question we do get asked a lot is what happens with insurances when you establish an SMSF or a self-managed super fund. So if you're coming from a retail fund or an industry fund and you have insurances attached to that super account, what happens with those insurances? Well, it is a very good question, but essentially you need to replace that insurance. If you want to close the existing fund down, you should speak to an insurance specialist that can help you transfer those insurances and have the ownership or have the policies owned by your SMSF. And that way you can close down the existing super fund. But if there are health issues and you can't get existing insurance, then you may need to keep that existing super fund open just for insurance purposes. So if you're healthy and you've got no issues with applying for new coverage, then probably that's probably the best thing to do typically. Otherwise, if you can't obtain insurance cover for whatever reason, you may need to keep that existing fund open just for the sake of insurances. What's the setup process like with an SMSF? Well, we have a very simple setup process. It's a one-page application form, a very simple process. It's a no advice model, so we don't provide advice with this particular model. It's essentially a service that we provide for those who know what they want to invest in or have an advisor helping them. So the process that we have is very straightforward. It can be complex though if you don't choose the right person to set up your SMSF or you're trying to do it yourself. It can be quite messy. So please make sure if you are setting up a self-managed super fund, get a professional to do it for you and save yourself a lot of headaches. So when you have a self-managed super fund, there's things you can and can't invest in. You can invest in most things, but one thing you can't do is buy a property or you have your SMSF buy a property from yourself. So the property needs to be at arm's length transaction. If it is a residential property, it needs to be, you cannot own that property and it has to be an arm's length transaction. There is circumstances where you can buy the property from yourself, and that is only if the property is a commercial or industrial property, or it's not residential property. Then your SMSF can purchase that property from you. Apart from that, your SMSF can invest in almost every single asset class. There are certainly some regulations around certain asset classes. So when you are setting up the SMSF or you are investing in certain asset classes, make sure you're talking to an SMSF specialist who can give you some guidance around what those regulations may be so that you are doing it in a way that keeps your fund compliant. But certainly, as a whole, SMSFs can invest in a whole range of different asset classes. Just make sure you do it properly and you get the right guidance. So when you have an SMSF and you want to make contributions to your SMSF, or your employer wants to make contributions to your SMSF, or should be, then they have what's called an electronic service agreement, which essentially some ESA details, which you'll provide to your employer, and your employer will use those details to make contributions on your behalf into your SMSF. You can then go and make personal contributions on your own behalf to your SMSF. Just make sure you're talking to whoever's helping you out with your SMSF. Make sure you're talking to them. There might be some references that you might need to make when you're contributing to your SMSF, so that when the tax return, the audit's done at the end of the year, they can allocate who that contribution is attached to which member, which member that contribution should be attached to. So make sure you're talking to your SMSF advisor or professional so they can help you with those contributions moving forward from both your employer and your personal contributions. So what is a self-managed super fund? A self-managed super fund is a private superannuation fund that you control and you make all the decisions around. So instead of your employer making contributions to a retail fund or an industry fund or some other fund that someone else controls and makes decisions over, those contributions now go into your private superannuation fund that you control and that you make decisions over. So that is what a self-managed super fund is in a very, very basic nutshell. So when you're establishing a self-managed super fund, there isn't technically a minimum balance to have, but the ATO does have a guideline of 200,000, and that becomes more once you hit that 200,000 mark, that's when it does become comparable to a retail or an industry fund. So there is guidance around this. It is around 200,000, but each strategy is different and each circumstance is different. So it's important to get advice when you are establishing an SMSF to make sure that that your strategy is actually going to work for you and is best suited to your outcomes. For example, if you're investing with an SMSF, you should be thinking long term. It is a long term vehicle for retirement, so you can't access these funds until retirement, but they are yours, and you may as well get them to grow, because if you don't, it's too late to take action once you're 2 years from retirement. The time to take action is now or yesterday, typically. So the sooner you get more in touch with your retirement savings and your super account in general, the better outcome is going to be long term. Just quickly, guys, if you're a busy professional, fed up with traditional super funds and overwhelmed by the setup of your SMSF, we can help. Book in a call with my team using the link in the show notes, and let's build your future on your terms. Now, back to the episode. So with an SMSF, there are certainly rules and regulations around the SMSF space and super in general. One of the big ones is pulling money out of your super account before reaching retirement age, or having any sort of reaching any sort of condition of release. We have seen clients during economic downturns, more specifically when they do start, we have seen accounts where people start dipping into their account. That is a massive no-no. The ATO will get picked up, and it will need to be replaced, and you will get a fine if it's not fixed. So a big no-no is don't be dipping in to your SMSF like it's a little honeypot, because it's not. It's there for retirement. So that's a big no-no. Don't dip into your SMSF. It's there for retirement purposes. If you are experiencing any sort of financial hardship, reach out to an SMSF, your SMSF specialist or advisor or professional, and they can certainly maybe point you in the right direction around getting a resolution. But certainly dipping into your SMSF savings is not an option. One of the things that we get asked a lot is an SMSF a complex structure, and is it slow and messy, and is it just a massive problem? And the answer is, if it's set up incorrectly, yes. You can avoid this by just engaging the right people from day dot. If you do this, you should have a very good experience, and the SMSF process should be overall a good one. But certainly if you're doing it yourself or engaging someone that's maybe not really a specialist in this space, then the process might not be one that you think is a pleasurable one. So that's a big one. So when we talk about opportunity cost with establishing an SMSF, one of them might be setting it up yourself and creating a big mess, and then losing time setting it up correctly. So, for example, you might be trying to get into one particular asset class immediately. You try and do it yourself, or you engage someone that doesn't have experience in this space. They stuff it up, and then it's got to be closed down or fixed, and then you've completely missed a great opportunity, investment opportunity, which obviously they do come around. But certainly a big thing is opportunity cost. Make sure if there is a specific asset class you're trying to jump into, then just engage the right people from day dot, and that way you won't miss that opportunity. Although the legislation's been around for a while, one of the big things is people still don't realise that you can borrow with your SMSF. So it's not a secret because it has been around for a while, but there's still a lot of people that don't know about it. So that is a strategy, quite a powerful strategy when you are adding leverage into your investment portfolio. So that is something to consider if obviously seek advice around this type of strategy, but certainly your SMSF can borrow to buy property. When you have an SMSF and you are borrowing, you need what's called a bear trust or a custodial trust. And that trust is a trust that's established, and the asset that you're purchasing will be in the name of that bare trust or custodial trust. Once that debt is paid off, then that asset can then be transferred into your SMSF. So it's a little bit more complex when you are borrowing. You do have an extra trust involved, which is called bare trust, and that's not bare as in BEAR with the big clause. It's bare as in it has nothing, no other assets inside of it. So that is something to consider when you are borrowing. You do need a bare trust. And you do need a trustee of that trust, which is typically a company. So make sure if you are using this strategy, you're engaging professionals that have established these, not only SMSFs, but also established the bare trust as well. So when you do have an SMSF or any trust has to have what's called a trustee. And an SMSF can have two types of trustees. It can have individual trustees, which need to be a minimum of two trustees, individual trustees, or it can have a corporate trustee, which is essentially a company. And most commonly, certainly in our practice, the corporate trustees are the most common. Because you can have a single member fund. But when you've got individual trustees, you do have to have a minimum of two, and that can become quite complex. If there is a marriage breakdown or there's a death, then who else steps in to be that other trustee? And that other trustee also has to become a member of that fund as well. So it does become a little bit messy. So when you are establishing an SMSF, make sure you're getting some guidance around which trustee you should have. With Bitcoin and cryptocurrencies, obviously they've exploded in the last sort of 5 years. So you can get exposure into that space with your SMSF. You've got to make sure that your investment strategy allows for that. So make sure you're updating your investment strategy, or make sure whoever's looking after you in the SMSF space is updating your investment strategy for you to make sure that is part of your investment strategy. But certainly it has exploded, and there is a lot more inquiry about this particular asset class. And you just need to be mindful around in this space. So in particular, there's not a lot of banks that will allow the transfer from once you've set up a bank account. There's not a lot of banks that are currently, or that's very restrictive with transferring your funds from any bank account into these crypto exchanges. So make sure that you're getting whoever's setting up your SMSF. If you are going into this space of crypto, then make sure that the bank you're using, or make sure you have a bank that allows transfers from their banking facility to the crypto exchange. Otherwise, you're going to set up your SMSF and then you're not going to be able to get the money to the exchange to purchase the asset. So make sure when you're setting up the SMSF, make sure whoever's doing that for you, make sure they're giving you advice or helping you establish an account with a bank that allows that transfer from the bank account to the exchange to purchase the asset. So when you are setting up an SMSF, you should, or your SMSF professional or advisor should be able to help you decide which trustee you should have, whether that be individual trustees or a corporate trustee. So things you'll also need to have prepared when you are establishing your SMSF. You'll need your tax file number, some identification. You'll need maybe a recent super statement to just to confirm how much you have in super and your member number, because I'll need all of those details for your rollovers when you're rolling funds from your existing super fund to your SMSF. So just make sure you have all of those details ready for your SMSF provider when you're establishing your SMSF, so that they can set it up efficiently and quickly. If they are chasing you for that sort of information, obviously it'll slow the process down. So have your tax file number handy, have your ID ready, have your super statement ready, and they should be able to help you with regards to which trustee you should have, whether that be individual or a corporate trustee. Can you set up an SMSF by yourself? Yes, you can, but you're going to stuff it up. So just engage a professional. We see it time and time again where people go and try and set up an SMSF by themselves and they come unstuck halfway through the process. Don't be one of these people. Just engage an SMSF professional who can set the fund up for you efficiently and not stuff it up. Typically, the fees can be paid for once the SMSF is actually established. You don't need to pay for it up front in some cases. I know in our case you don't. So look for an SMSF provider that can set the fund up for you and then pay the fee once it's been established. Don't try and do it yourself because it is a complex structure and you will stuff it up. When you are establishing an SMSF, it's like anything, you pay for what you get. So if it's free or it's cheap, you're probably going to get a very cheap service or potentially not a service that may be suited to someone that requires a bit of hand-holding. So if you do require a bit of hand-holding and you want a service that is a little bit more high touch, then probably just pay a little bit extra and have a company do it for you that's going to step you through, and you can call them and ask questions. You do have a dedicated customer service professional that can answer your questions and help you through the process. If you are doing it on the cheap and you are setting it up for free or online, then my guess is it's probably not going to have the customer service and you're not going to have someone there to answer your questions and step you through that process and hold your hand through that process. So, as I said, you pay for what you get. If you are going to set up an SMSF and you do require hand holding, pay a little bit extra, have someone do it that knows what they're doing and can answer the questions, and you can call when you need to and ask the questions that you need to. It is your retirement savings. Don't stuff it up. Just pay the extra money and get it done properly and have someone there to hold your hand through that process. When you are establishing an SMSF, prices do range, as I mentioned. So it can be anything from free to, which is, I wouldn't expect much service, but anything up to if you've got a corporate trustee, then it could be up to $4,400. If you've got a bear trust, it could be all the way up to $6,600 with a bear trust. So a bear trust is what you need when you've got some borrowing. So you're buying a property and you need some lending, you need a bear trust. So prices can range anywhere from the low range being $1,100 or $1,200 or $2,200 all the way up to $6,600. With a bear trust. So depending on what you're needing, if it's just an SMSF with an individual trustee, obviously that's going to be cheaper. But if you've got a corporate trustee, you need a company. So there is a cost in establishing a company. So typically it's going to be a little bit more, but that's typically the range. But in that range, you will pay for what you get. So don't expect much service from a provider that's doing it for nothing. Thanks for tuning in to this episode of SMSF Insider. If you got value from this, make sure you subscribe so you never miss the strategies we share to help you take control of your financial future. Find us on socials at Blue Chip SMSF or book a call with our team to see if we can help you.